Hey guys, it's Vivian, your hot stock girl. Today I'm going to discuss Square. The ticker symbol is SQ. Square was founded in 2009 by Jack Dorsey and Jim McCurry and launched its first app in 2010. Square went public at $9 per share in November of 2015. The company makes hardware and software that allows sellers to turn mobile devices into payment processors for their businesses. Square's mag strip reader can be attached to a cell phone or tablet so you can process credit card transactions. This makes it easy and inexpensive for small businesses to collect payment from its customers. Square shareholders have seen the stock surge from its IPO price of $9 to over $100 per share. Since the recent stock market pullback, Square shares have traded down to the $70 range. So it's now the time to buy. Let's look at the financials. Square does $2.6 billion in sales, and their second quarter adjusted revenue showed a 60% improvement over the prior year. That is excellent growth. Square's market cap is around $30 billion, so the stock is trading at over 11 times its revenue. 11 times revenue is extremely high valuation, especially when you consider that the company is losing money, and I'm estimating that EBITDA will be less than $30 million this year. That puts the enterprise value at over 100 times estimated EBITDA. Square is the leader in mobile processing, but does have competition from Intuit and PayPal. Square has $1.6 billion in cash and almost $1.1 billion in debt. That is not a very big cash cushion and could become a concern in future quarters. Another thing I really don't like is that Jack Dorsey is the CEO of both Square and Twitter. Mr. Dorsey may be a bright guy, but running two multi-billion-dollar companies is not fair to the shareholders of each company. Square has made some small acquisitions like Weebly and Nesty to expand its businesses, but I still see Square as a one-product company. When a company relies on one product for the majority of its sales, there is an added risk to investors. Anyone who owned GoPro or Fitbit could tell you the risk of over-relying on one product. I also don't see how Weebly, which is a website builder, and Zesty, which is in food delivery, help Square over the long term. The bull case for Square is that they have an incredible opportunity to expand internationally. I don't think expanding internationally will be that easy. First off, they would probably need to borrow more money or issue more shares to push for strong growth internationally. Their recent acquisitions show me a lack of focus on their core business. If you bought Square a few years ago, you would have done great. As a long-term investor, the risk seems way too high for me for the potential reward at the current stock price. Now, if the pullback in the stock price continues, I will revisit the stock in the future. So, there you have it, my thoughts on Square. I'm Vivian, your hot stock girl, and please be sure to subscribe below and check out my other videos for more great investment ideas. Bye! I don't know why I get so stiff. I don't know.